Eurozone lending accelerates to a fresh two-year high. Seventh China Arab States Expo kicks off. And Nvidia's Jensen dismisses concerns about the AI spending boom. Welcome to the Economic Bulletin. We start off with Europe, where European Central Bank data has shown that growth in Eurozone banking lending accelerated to a fresh two-year high last month on the back of lower interest rates and a gradual economic recovery. Loans to households grew by 2.4% in July, the biggest increases since April 2023 from 2.2% in June. Credit to companies increased by 2.8% from 2.7%, marking its fastest pace since June 2023. Deutsche Bank has been fined $23.8 billion, Hong Kong million, over various breaches between 2015 and 2023, according to Hong Kong Securities and Futures Commission SFC. The violations include overcharging clients on management fees, incorrect assignment of product risk ratings, and failure to disclose investment banking relationships in certain research reports. It also added that in total, the bank overcharged clients in fees by approximately $39 million between November 2015 and November 2023. The economy ministry has revealed that the Swiss economy will likely grow more slowly than previously expected next year due to the massive import tariffs imposed by U.S. President Donald Trump. In its updated economic scenario, the ministry is eyeing growth of 1.2% this year and 0.8% next year. The ministry also noted that a severe recession is not currently expected. However, the economic impact could be significant for certain sectors and companies. National Statistics Institute has revealed that Italian consumer morale fell by more than expected in August, whereas business sentiment was stable and mixed signs for the Eurozone's third largest economy. The Consumer Confidence Index fell in August to 96.2 from 97.2 in the previous month. Composite Business Morale Index, which combines surveys of the manufacturing, retail, construction and services sectors, was unchanged in August at 93.6. Finance Minister Eric Lombard said he sees no risk of a financial crisis in France, aiming to reassure investors ahead of a likely confidence vote defeat next month. Following a slump in French financial markets, President Emmanuel Macron has told his cabinet that France is a solid country with solid economics, and that it must take the reins of its destiny. Government spokesperson Sophia Primas stated that this message is intended to reassure financial markets. The comments come ahead of a looming government confidence vote that Prime Minister François Bayrou is expected to lose over his budget plans. Primas noted that Macron did not discuss the option of dissolving Parliament during the meeting. And for further analysis, we are now joined from Barcelona by Director of EU ASEAN Center and former World Bank advisor, Mr. Meher Nicolas Ferzili. Welcome to Qnews Economic Bulletin, sir. Sir, how do you assess the current state of the French economy in light of recent market slumps and political uncertainties?
I'm delighted to join you today. It's complicated because I think you have three crises converging or happening at the same time in France. You have a financial crisis, etc., the budget deficit. That's financial crisis. It's linked to the bond market, right? These are the debt instruments issued by the French government. So this is financial. Then you have another layer or pillar or dimension, which is political. The government of the Macronist bloc is shrinking by the day. They're losing MPs and senators every week, and they're on the verge of collapse. So before collapsing, the Prime Minister, François Bayrou, who's a political ally of Macron from a smaller Catholic, he announced 2 days ago that he was going to trigger a vote of confidence, in his case, a vote of no confidence, very likely, in French Parliament on the 8th of September. And the outcome of that vote, unless a miracle happens, is known in advance on the 8th of September at midnight, triggering a political constitutional crisis. And there's a third layer, which is, the morale of French public opinion and the morality of French politicians. In both cases, they are collapsing. So all that put together, financial, political, public opinion and morale.
Sir, the political level, sir, why are the MPs why is French President Emmanuel Macron losing MPs at this point? And of course, on the moral, why is the public opinion collapsing? Of course, financial, we do understand economically what's going on.
Good question. So it is in a way the end of the road for Macron and his party. And it's the consequence, with a 1-year delay, of a big mistake. So 1 year ago, 13 months ago to be precise, thinking he was smart, even though he had a big majority in parliament, Macron gambled and he dissolved parliament 13 months ago, calling early legislative parliamentary elections, which he lost. But he did not lose completely. That was 1 year ago. Adding bits and pieces of centrist, center-right, political party, what's left of them, he was able to build a small, fragile coalition 1 year ago, and he brought François Bayrou as prime minister. And since then, he was never able to, the French government was never able to government for the past 13 months with a rather thin majority from the start. So at the beginning, we knew the majority was rather thin, and by the day, he lost the support of a few MPs and senators, and he made, many wrong decisions. So to make a long story short,
okay, sir, what about the morale of the public opinion? Why is it, sir? Why is it collapsing at this point?
Because there's this mismatch between the French Constitution. So France is governed by something called the Fifth Republic, which was drafted by my friend, Michel Debré, actually, whom I knew when I was young. It was drafted in 1958-59 by a great public law scholar named Michel Debré, who was an advisor to President Charles de Gaulle. So that constitution was made for a very particular kind of French system. You can call it a nationalist French Republican system. And today, that constitutional law, the Fifth Republic, doesn't fit anymore people like Bayrou or Macron, because people like Bayrou and Macron, they don't have the caliber to operate under that very demanding sort of French Republican, patriotic, nationalist system. And the EU Commission, year after year, the EU Commission has been in destroying French constitutional law. So year after year, the EU Commission in Brussels, they are stealing away legal prerogatives and executive power and legislative power prerogatives of the French. They're stealing them in a way from Paris and transferring them to Brussels and Berlin. So all that put together, now the French public opinion, they're realizing that, something is wrong. Important policies which matter for the French people are no longer decided by Macron or by Bayrou in Paris. They are decided in Brussels and Berlin by the European Commission, and the French are realizing that because there is an economic and social crisis. So, if the economy is doing well, you don't care as an average, French voter if big decisions are made in Brussels, Berlin, or Timbuktu, right? But if the economic situation is bad, which is the case today, then you say, oh my God, we have lost our sovereignty. We, the French voter, we, the people, can no longer decide our own fate. All the major financial, economic, fiscal decisions are made by the likes of Ursula von der Leyen or NATO or whatever, but we, the French, are losing our sovereignty. So all that is happening at the same time, and this is why public opinion is very angry at Emmanuel Macron.
Got your point, sir. From Barcelona, that was Director of EU ASEAN Center and former World Bank advisor, Meher Nicolas Frizzelli. Sir, we wanted to continue, but the internet, there is a technical problem in the internet. Thank you very much for your insights, sir. And now we move on for the latest developments from the Eastern Hemisphere. Figures released at the 2025 China International Big Data Industry Expo have revealed that Beijing's data industry sector has grown to a scale of over 5.80 trillion yuan. The industry is experiencing an average annual growth rate of more than 15%, a pace that organizers expect to continue through the country's 15th five-year plan period from 2026 to 2030. The expo, which is taking place in Zhejiang, is showcasing cutting-edge innovations that integrate data with artificial intelligence. The 7th China Arab States Expo kicked off in Yuanshan, China, with a record number of participants from 75 countries and regions. The event, which runs through Sunday, is a key platform for fostering cooperation under the Belt and Road Initiative. For the first time, all 22 Arab nations are in attendance. The expo is focusing on new technologies in the digital economy, AI and clean energy, with the launch of new initiatives like the China Arab States Bank Consortium and the Silk Road E-Commerce Innovation and Development Conference. On bilateral relationship, China has extended anti-dumping duties on phenol imports from the United States, the European Union, South Korea, Japan and Thailand for another 5 years. The decision was announced by China's Commerce Ministry in a statement on Thursday, with the extension taking effect on August the 29th. Phenol is a key industrial chemical used in the production of plastics, synthetic fibers and other chemical compounds. India's industrial output in July grew at its fastest pace in 4 months, rising 3.5% year-on-year. Official data has shown that this growth, which was higher than analysts forecasted, was driven by a 5.4% increase in manufacturing output. The output of consumer durables, such as cars and phones, saw a notable rise of 7.7%, while consumer non-durables increased by 0.5%. South Korea's central bank has held policy interest rates steady at 2.50% for a second straight review amid the concerns about housing market risks. It also revised up growth forecast for this year to 0.9% from 0.8% previously, which would still mark the slowest expansion since 2020. The bank governor highlighted a big chance for the current easing stance to stay at least through the first half of the following year, as growth was likely to remain low in quarterly terms until the first half before it reached close to the economy's potential rate in the second half. Moreover, South Korea's central bank has expected a significant economic shock from higher U.S. tariffs, even with a trade deal. The bank noted that despite successful negotiations, the average U.S. tariff on South Korean goods has risen to about 15% from zero under the previous Korea-U.S. free trade agreement. It also said that compared to the period before Trump's tariffs, South Korea has seen a steeper tariff increase than more than half of the 50 exporters, including Japan and the European Union. This is largely due to the high exposure of South Korean exports, such as automobiles and steel, to significant U.S. duties, which offset the benefits of the free trade agreement. Thailand's industry ministry has reported that manufacturing production index MPI in July dropped for the first time in 4 months to reach its lowest level in nearly 2 years, weaker than forecast after falling car production. The MPI contracted 3.98% in July from a year earlier versus a forecast year-on-year fall of 1.1%. It added that the output was also weighed down by tighter banking lending and declined industrial sentiment. On an annual basis, MPI index has fallen 0.7%. Additionally, car production in Thailand fell 11.39% in July from a year earlier, the first annual fall in 3 months. The Labor Department has reported that the number of Americans filing new applications for jobless benefits fell last week, but tepid hiring could raise the unemployment rate to 4.3% in August. Initial claims for state unemployment benefits decreased 5,000 to a seasonally adjusted 229,000 for the week ended August 23rd. The report added that a number of people receiving benefits after an initial week of aid, a proxy for hiring, fell 7,000 to a seasonally adjusted 1.954 million during the week ending August 16th. The Commerce Department's Bureau for Economic Analysis has stated that profits from current production increased by $65.5 billion in the second quarter, reversing a $90.6 billion decline in the first quarter. However, major companies like Caterpillar and General Motors has already reported financial hits from the duties, with clothing retailer Abercrombie and Fitch were earning of an additional $90 million in costs. Economics expects this trend to limit full-year growth around 1.5% down from 2.8% in 2024. NVIDIA CEO Jensen Huang has dismissed concerns that the AI spending boom is ending, predicting a multi-trillion dollar market opportunity over the next 5 years. His comments follow a disappointing third quarter sale forecast that caused the company's stock to fall 1.56% on Thursday. The outlook, which excludes potential China revenue due to ongoing trade tensions, has raised investor concerns. However, Huang maintains that demand for major tech companies remains strong and that NVIDIA's technologies advances are driven a new industrial revolution. Apple is warning that the United Kingdom plan to boost competition in the mobile operating system market could harm consumers and developers. The company says proposed rules, which could force it to open up its systems to third parties, would undermine user privacy and security and force it to share its technology for free. The United Kingdom's Competition and Markets Authority is expected to make a final decision in October. It has countered that its approach a different form of the EU and will not compromise privacy or intellectual property. Reuters has reported that ByteDance, the parent company of TikTok, is set to launch a new employee share buyback that will value the firm at more than $330 billion. This represents a significant increase from its previous valuation of $315 billion. The higher valuation is driven by strong revenue growth, with ByteDance second quarter revenue up 25% year-on-year to approximately $49 billion, making it the world's largest social media company by sales. Despite its financial success, ByteDance's valuation remains well below Meta's, largely due to political and regulatory risks it faces in the US over its ownership of TikTok. New U.S. tariffs of up to 50% on Indian imports are set to negate the estimated $17 billion Indians saved by purchasing discounted Russian oil. According to a New Delhi think tank, the tariffs could slash India's exports by nearly $37 billion this fiscal year, with significant impacts on labor-intensive sectors like textiles and jewelry. The punitive measures have put thousands of jobs at risk and created a diplomatic challenge for India, which is reluctant to halt Russian oil exports that now make up nearly 40% of its total crude purchases. Italian Prime Minister Giorgia Meloni has pledged to permanently cut energy costs, calling them a heavy burden on the economy. To achieve this, her government is pursuing a two-part strategy. It's paving the way to restart nuclear energy production, focusing on next-generation technologies like small modular reactors. Italy aims to become a gas hub in the Mediterranean to diversify its energy sources. These long-term plans come in response to calls from Italian industry, which faces some of the highest energy costs in Europe. Oil prices edged lower on Thursday after rising in the previous session, pressured by expectations of lower U.S. fuel demand at the end of the summer travel season and by the restart of Russian supply to Hungary and Slovakia through the Druzhba pipeline. Brent crude futures were down 11 cents or nearly 0.2% to $67.94. West Texas Intermediate WTI crude futures were down 7 cents at $64.08. Gold prices hit a 5-week high on Thursday, supported by a softer dollar and a safe haven flows due to ongoing concerns over the Federal Reserve's independence. Spot gold rose 0.4% to $3,410.82 per ounce dollars, its highest level since July 23rd. U.S. December gold futures were up 0.6% at $3,468.30. The dollar slipped 0.4%, marking greenback priced gold more affordable for overseas buyers. Global hedge funds are on track for the biggest month of buying in China since February, with investments heavily focused on onshore A shares. A Morgan Stanley note indicates that the buying has been concentrated in the consumer staples and industrial sectors. This shift comes as onshore China shares have staged a catch-up rally, with the Shanghai Composite surging 12% this month. Meanwhile, hedge funds have been selling off stocks of internet giants listed in Hong Kong. In markets, global stocks showed a mixed performance during Thursday's session. In the United States, Nasdaq futures rose 0.20%, while S&P 500 futures edged down 0.04%, and Dow Jones Industrial Average futures dropped 0.21%. Moving on to Europe, where the UK FTSE 100 declined 0.40%, while Germany's DAX inched up 0.08%, and France's CAC 40 rose 0.34%. In Asia, the Shanghai Composite increased 1.14%, and the Nikkei 225 hiked 0.73%, while the Hang Seng Index lost 0.81%. That brings us to the end of our economic bulletin. Here's what we have been covering. Eurozone lending accelerates to a fresh 2-year high. Seventh China Arab State Expo kicks off. And Nvidia's Jensen dismisses concerns about the AI spending boom. This concludes our economic bulletin. Don't forget to follow Qnews on YouTube, Facebook, X, Instagram, and TikTok at QNewsED to stay informed. Thank you very much for watching and stay tuned for more updates on Qnews.